Good morning. Welcome to the webinar today. I think you'll find this interesting, especially if you're a business retain your employees or attract better ones. Anyway, here I am in my office, and I'm going to go ahead and go to the PowerPoint. Okay, Kai-Zen for recruiting and retaining. I found this quote pretty interesting. Grace Bernard is one of the founders of NIW, the creators of Kai-Zen. She said one day, when navigating through the game of life, what happens to us may not always be in our control, but what we can control is how we prepare for it. Wow, what a truthful statement. So here's just a heads up. Our next webinar will be November 2nd, the creation of Kai-Zen, unveiling its fundamental principles. And then the one for December will be December 7th. Actually, thinking about the topic, I'll have that ready. Our webinar is rather kind of in three sections. Kind of a review of the basics, and then we're going to have the topic, and then we're going to go to the ILIA website where we're going to crunch some numbers and show some examples. Anyway, OakTree Premium Finance, we specialize in Kai-Zen, a unique enhanced investment strategy utilizing life insurance with a significant portion of the premiums being financed. That's basically what we do. Approximately 3-to-1 finance leveraged. Example, you put 100,000 in, then we have a bank putting in 300,000. I found this quote: if compound interest is indeed the 8th wonder of the world, then leverage compounding is certainly the 9th, 10th, and 11th. Petro Manos. Here's an overview of our services and products and uses. First, we offer traditional premium finance, where we finance the total policy. Then we have our Kai-Zen product, which is available for almost everybody. A retirement income, we can use it for transferring wealth. We can use it as an infinite bank. We can use it as a fixed income alternative. You could even have it this is your life insurance plan. Executive employee benefits. There's other business uses. And we put a box here for those who don't qualify for Kai-Zen because you're too old like me. We have some strategy for you. Years ago, I went to a class in Houston about features, advantages, and benefits. I think this will be helpful for everyone to understand. Features are the product's attributes. Advantages are how these features benefit consumers, and benefits represent what users gain from them. Benefits are the tangible results of utilizing these features. Couple quotes: nobody wants to buy our products, they want to buy the products of our products. They don't want to buy vitamins, they want to buy health. Reading about features is like reading the ingredients on the side of a cereal box. So I'm going to show you the features, advantages, and the benefits briefly on Kai-Zen. The 5 key features and the advantages. Enhanced leverage funding, up to 3-to-1. And the advantage is substantially reduced capital risk, giving you 60 to 100% more income. 2, market comparable gains on downside protection, eliminates market risk. 3, tax deferred accumulation and tax redistribution, eliminates tax risk. Death benefits and living benefits, coverage for senior health conditions and critical injuries, long-term care. This eliminates financial vulnerability risk. And last, only 5 annual payments reduce payment fatigue. That's the 5 key features and advantages. I see 10 benefits of Kai-Zen. More retirement income, as I've said before, 60 to 100% more retirement income, more consistent growth, no downside, preserve more wealth, tax-free, comprehensive protection, death benefits and living benefits, simplified payments, only 5, more accessible for emergencies, no retirement plan restrictions, additional risk reduction. NIW designed and stress test Kai-Zen, and they continue to do so. Effective executive or employee benefits is a non-qualified plan. You're getting all these things for your employees. Family generational wealth, giving in a meaningful way, and as an alternative to fixed income, potentially better returns. Today, we're going to handle that executive employee benefits. The quick qualifications: you have to be between 18 to 65, standard or better health, annual income of 200,000 in most cases, possess the financial resources available to make annual payments, 5, from 16,000 to 44,000 based on age, and growth. You really do need to give it at least 15 years for your investments to grow. I call that a qualification. So let's get into it. Kai-Zen for recruiting and retaining. We're going to start with a video. NIW has made a good video. Oops. Well, we'll get to that. Let me get to this other screen. Okay, now we've gone to my website. On my website here, this is the section on videos, and we've got this kind of the 6 top for now videos. In the video archives on my website, I've got other videos that I've liked that I've put on, and I'll continue to add others that look good. But today we're going to look at this recruit and retain. Here we go.
The mindset of the workforce has changed due to the COVID pandemic. Employees want more flexibility, more protection, and more ways to stay in retirement without increasing risks to reach their goals. CEOs and HR professionals across the country keep telling the same story. They can't attract and retain top talent. Employees feel their only option to saving more for retirement and having more protection for their families is to switch jobs, a decision many employers want to avoid. In the long run, an investment in employee retention would save the organization time and money. Unfortunately, many companies are already allocating 40 to 80% of their current gross revenues towards employee compensation. Committing to additional benefits would increase cost and make it difficult to maintain growth. Introducing Kai-Zen. Kai-Zen isn't just a philosophy for significantly improving benefits without increasing costs. It's a strategy that offers real solutions for addressing many financial fears. Kai-Zen is different because it offers organizations the one solution no one else is providing: the money. For example, you want to retain a highly skilled employee who wants more money in either income or benefits. You determine an annual dollar amount you're willing to spend. You use your contributions to fund a uniquely designed cash accumulation life insurance policy. A small portion of the contribution is used to provide protection benefits, while the rest of the money has the potential to earn interest. Here's where Kai-Zen is very different. Your contributions provide the only collateral needed for a lender to add up to an additional 3 times more money to the policy. Insurance companies provide the security that's needed to protect the lender's money, providing an opportunity to significantly enhance the benefits provided without the typical risks associated with borrowing. If recruiting and retaining is critical to the growth of your business, then it's time to enhance how you provide benefits to your future employees. See how Kai-Zen can provide your employees the potential for 60 to 100% more benefits than what your contribution could provide alone. Click the link in the description to hear more about Kai-Zen today.
Well, how is that? I like all their videos, but that was a good one, and it get a good review of Kai-Zen and introduce the concept of helping with your employee benefits. Here's some quotes I found. If I were running a company today, I would have one priority above all others: to acquire as many of the best people as I could, because the single biggest constraint on the success of my organization is the ability to get and to hang on to enough of the right people. Jim Collins. If you fulfill the wishes of your employees, the employees will fulfill your visions. Amit Kalantri. Clients do not come first, employees come first. Have you ever heard that and wondered, wow, is that right? Clients do not come first, employees come first. If you take care of your employees, they will take care of the clients. Train people well enough so they can leave. Treat them well enough so they don't want to. Richard Branson. Person who feels appreciated will always do more than what is expected. It's all true. I'm sure you've experienced in your life and lots of people's lives. Retention. 99.6% of companies have less than 10 employees. Wow. If a company with 10 key employees loses one or two, they're sunk. Well, or they certainly have a problem. Why would a CEO, a corporate owner, want to provide benefits to an employee? Well, that's the topic of our topic today: recruit and retain top talent, but additional and expected part of today's employee offering. Create productivity, reduce employee turnover, ability to retain group pricing. Benefits should address employees' biggest fears: medical emergency, premature death, retirement planning. If you can help with these things, they'll stay. So what are your main concerns? Circle them if you could. Write them down. What are your main concerns? Retention. 23% of millennials in the workforce, 12.88 million, plan on changing jobs in the next 6 months. That's not my generation. It might be yours, and you probably understand. What makes up the cost of losing a key employee? Recruitment costs, onboarding costs, lost production, customer service is diminished and errors start to happen, training costs, institutional knowledge, cultural impact, future competition. What are the average costs when losing employees? 100 to 150% salary for tactical positions, 200% plus of salary for C-suite positions. What are you currently doing to retain? I'm sure a lot of you, or most of you, offer health or dental health at least. And some of you dental insurance, you give bonuses, you have a 401k, maybe you have a match. These are pretty common, aren't they? I wouldn't go to, no matter what our situation would be in life, I wouldn't go to a company without a health plan for sure. And I would like to see something for my retirement. If competitors is out recruiting your people, do you think they also offer these benefits? Then are these benefits really retaining your people? It's almost a necessity. Some companies add a deferred compensation plan, employee stock option plan, phantom stock. That helps. It helps a lot. I've helped companies with deferred compensation plans. What would lure an executive to leave his or her current employment? Something they are worried about but not receiving. Maybe a substantial retirement benefit. Everyone would love a defined benefit plan. Do you understand what a defined benefit plan is? Defined benefits is defining the benefit. It's where you get the 70% of the top last 3 years as a pension for the rest of your life. This is kind of the world of the past. They're going away, actually almost all gone. They got too expensive. Corporate liability became excessive. Administration costs became prohibitive. Complexity of the plan often required an administrator, absolutely administrator, or a CPA firm to manage the plan. Increased salaries, increased future obligations require that all eligible employees participate. A lot of companies have eliminated their defined benefit. How can a company offer a substantial retirement alternative as much like a defined benefit as possible that differentiates, that won't break the bank, eliminates corporate liability, may even retain an employee? Well, we better retain our employee, huh? Well, introducing Kai-Zen as a non-qualified plan. Do you know about non-qualified plans? The benefits of a non-qualified plans, not subject to ERISA, not all the regulation. Choice of participants. I'm being nice there, but that means you can discriminate. You can offer it to Bill, your most important guy, and to Sam, and you don't have to offer it to the rank and file, and you don't have to offer it to the people you don't think are going to stay anyway. You offer it to the people you really want. Certainly a diversification from a qualified plan, IRAs, 401ks, unlimited contributions, tax deductions to the employer, retirement savings for the employees, tax advantages for employees. We've gone over those benefits of Kaizen a little earlier. Well, I've added Kaizen to this here. Growth index to the market without downside interest rate. That's one of the benefits. Features, advantage, benefits. Matching contribution up to 3-to-1 without a third-party obligation. Cash benefits in the event of death, chronic critical illness, or terminal illness. Would like an employee like a death benefits, chronic ill if they got long-term care? Do they want to have a better retirement? They want something growing faster with no downside risk and all the other benefits of Kaizen? Yes. Oh, you know what the most important benefit of Kaizen is? I forgot to mention this was coming. Substantially tax favored supplemental income. You know why we say tax favored? Because the regulators like us to say that. What it's really going to be is tax-free supplemental income. Okay, substantially tax-favored supplemental income. What can this do to increase your supplemental retirement income? Let's give an example. Male 45. This could be a male 45 contributing on his own without his employer, but this could be his employer contributing $25,000. Bill, here's what I want to do for you. I'd like to put in $25,000 into this plan per year for 5 years, and I hope that you'll stay with me for 5 years. If you quit in the 5 years, then I'll quit paying the $25,000. That's kind of the golden handcuffs. Anyway, this example, we're using a rate of 6.71. We're doing that because that's what the regulators want us to. They don't want us to go too high a return. We've averaged 8.5 or so Kai-Zen for the last 10 years, but we're using 6.71. And we're actually using a loan rate because interest rates are higher of 6.21. So we're showing a spread of just 0.5, 0.5%. And interesting, from 1930 through now, there's never been a 15-year period of time where that spread would have been less than 2%. So all my illustrations are lower than the average has ever been. So what amount of net income would you receive on this contribution for 5 years, starting at 65? If you do that in a regular investment account and you got the 6.71, you paid taxes, you could then get an income per year starting at 65 of $20,661 per year. If you did it in a 401k, a qualified plan, you could have an income of $25,818. The tax deferral helped you have a higher return. If you did this in Kai-Zen, you'd had an income of $40,000. With these current numbers all across the board, guess which one eliminates market risk and tax risk? Well, you know the answer. Kai-Zen. All right, let's give you a little more information. So we've got this 45-year-old contributing $25,000 for 5 years. I'm using the 6.71, loan rate of 6.2, spread about 0.5, and the net rate of return, even with that small spread, the internal rate of return at 6.71 is going to be 8.86. Wow. And that's a low number. Annual, we've already seen it, the annual favorite income. The income tax-free income starting at age 65 would be $40,000 a year. What if this employer who did this $25,000 for 5 years for you, then did a second, oh, I want to do a second one of these for you. So in 5 years from now, they start another one. Now your income at age 65 would be $67,000 per year by doing 10 years of Kai-Zen. Well, I probably should have put the red down before I did this last green, but here we go. What if you, the employer and the employee, what if the employee said, hey, can I put some of my money in that too, along with you contributing 25,000? Can I put in 25,000 a year? Well, if the employer did 25,000 and the employee did 25,000, now we got an income of 134,000. Wow. And no more tax risk. No more market risk. Substantial life insurance benefits, living benefits, chronic and terminal illness. Contract is also owned by the employee. Well, we took a bit of time there to show you the benefits for the employee. Now we say, so what's the employer really going to get? Well, I'm going to give it to you all once here. Improved employee retention. It's non-qualified, no government intervention. You can discriminate. Deductible to the corporation. It's called a 162 bonus. Virtually no administration costs. Virtually no corporate liability. Ability to continue a program for another 5 years. 5 to 10 year budgeting plan, not forever and ever. Can be designed to mimic a defined benefit plan. I think this is the best there is. So there's the 5 key features and advantages of Kai-Zen, and you can have it on your own. If you buy it on your own, the employer can offer this to his employees and make it a benefit that they will want to keep. So now this slide is to remind me to go to the ILIA, the Interactive Learning Information Assistant Program, and just show you an example or two. So let me get to my page. Oh, I think it must have blipped out when I wasn't looking. I'm going to have to pull it up. Sorry, you get to see all my things here. This ILIA website, you need to have, excuse me, you're not seeing the right screen. I'll get you there. All right, now we're here at the ILIA website. And so this is the ILIA website. Along the left side, you have to have a login and password to go to this page. And if you haven't been invited by myself to have a login and password, you can ask me for one, and you'll be invited. You can set up your own login and password. On the left, we have a list of this is the index of this site. You've got a beginning, you've got the introductory video, financial solutions, how it works as another video. You've got all these things that explains really well. In most cases, this will answer 98% of your questions about Kai-Zen. But the one I want to go to is I want to go to the estimate my benefits. At the top, you'll see that there's the quick results estimator and there's the custom design. And first, I'm going to do a quick results estimator. We put in the age, we put the sex, and then we put how much we want to put in per year. What age should we do? Let's do 45. We can do male, and it's on 40,000 a year. We can leave it at that. So let's do the calculation. So it's graphically showing the 5 payments, the gold piggies that you make. Is graphically showing you the bank payments. They're basically matching you, not quite, the first 5 years. Then they're continuing their 5 payments, and they're making your payments after the 5 years. So the numbers are, you put in 200,000, and they have put in 522,000. So we have 722,000 working for you. A little comment about this 522,000. Have you paid taxes on it? No. It's put in tax-free. It's just put in, and it's not part of your taxes that you file or anything. And here it shows you 6.71. Now we're going to click here for the benefits. And if we scroll to the top, here's the internal rate of return, 8.71. The life insurance initial death benefit would be $1,077,525. And then the income starting at 65 would be 63,000 a year. And by the time he'd receive from 65 to 90, 1,638,000. And he'd still have a death benefit of 954,000. How much did he put in again? 200,000, and we're getting 1,638,000 back tax free. Usually about here, people say this is too good to be true. Well, it isn't. It works. If I click the next button, we get a comparison. There's the graph chart, but I want to go to the numbers. The numbers are, here's our 63,000 tax-free income starting at 65. If we did it in the same life insurance policy without the borrowing, we'd have an income of 44,000, substantially less. If we did it in a same return number in a regular investment account, your income would be 32,737. And if we did it in an IRA 401k, you'd have an income of 41,309. For a 45-year-old, it beats the competition. Let's go to the custom design. And we're going to go new custom design. And here we put in more information. And so we get to choose a name. Abe. How's that? Young for last name. And we put in a birthday. Let's say January 1st, 1975. That's a 48-year-old. Oh, we have that 45. Let's try someone different. Let's go 2000. Ooh, this is a young person. So we're talking about retaining and recruiting and retaining, but this could be grandpa buying on his 23-year-old we got to select the gender. This could be grandpa buying on his 23-year-old female and granddaughter, and we state the health is average or excellent. Does this client use tobacco or marijuana? No. And we click next. Then we say, do we want maximum death benefit or do we want an income program? Most people like that retirement income, tax-free retirement income. So I'm going to click that. And then we go here and we have the minimum for that age. And it says 19,350. I'm going to go pretty close to the bottom. Let me go that 20,000. And so we have 20,000, we do next. And now we get to select on this custom design when to begin distributions. 65 to 90 is a standard, it just pops up. Let's change that to 62 when we can start receiving Social Security. We'll retire at 62. Let's extend this to 100. So we got a 20. How old is this person? Pretty young. Okay, let's review results. Now, in this custom program, there's a little more crunching and number crunching, plus they're going to provide reports, printable reports that we can do. So it takes a little longer to generate. There's stress testing. While we're waiting for that, maybe it's coming up faster. Well, I'll see. They've stress tested this for the 1980s when there was high interest rates, and Kai-Zen came out fine. They've stress tested this for the 1930s when the market hardly did it. Well, it had some horrendously bad years, and it did fine. Either interest rate issues or stock market issues, Kai-Zen is kind of fine no matter what. And with higher interest rates today, it's fine. Actually, it's doing just great. It doesn't matter because it matters what your in between is doing. Now, they've generated the numbers, and at the top, see, it says loading illustration. It's still working. But I want to show you that, but I want to, let's go to the numbers first. So here we have the contributions for 100,000. Bank's putting in 227,000. Now we're going to click next for the benefits. The internal rate of return is 8.45. Initial death benefit is $1,012,000. 136,000 tax-free income starting at age 62. 136,000. They only put in 100,000. You talk about too good to be true, and by the time you hit 100, 5,304,000. 100,000 can get that kind of income tax-free, and we still have a death benefit of 1,682,000. Amazing. Well, how'd it compare? Here's the numbers: 136. Without the leverage, without the borrowing that Kai-Zen does, it'd have an income of 80,000. If you did it in a regular investment account, it'd been an income of 42,936. Or if you did an IRA, 401k, income of 56,000. Is 136,000 a little bit more? Amazing. Let's go to the top. View illustrations. Now we can click that, and we've got the carrier illustration. We got the client proposal. I'm going to click the client proposal first. So here we got a proposal for Abe Young. Oh, it was a girl, wasn't it? Oh well. So we've got the whole explanation, all the details on Kai-Zen, traditional retirement plan comparison, pretty thorough, going over all the details of it. There's our piggies again. There's your contribution and a full explanation. And then eventually, when we go scroll back, we got a spreadsheet showing all the details. It's pretty small print, but I use a magnifying glass. Anyway, it's a terrific illustration. And then I'm going to go back and show you the carrier illustration. We did today. I used Allianz, and this illustration is a lot longer. It goes in a lot of detail, and there comes the point. Well, it talks about the index options. It shows you everything, what they're doing. Let's see. Let me just show you. See, this blended index has averaged 8 current. Oh, okay. Let me. Is average. Here's the 5.24 for 10 years. But at this interest rate world right now, we can give you 180% of the index, or 9.85. So here's 195% of the index, 180. When interest rates go higher, we can give more participation. Here's a 218% return on the index, but from the Bloomberg. Anyway, this illustration is extremely. This is official from Allianz. Allianz is backing this illustration. I'm sorry, I'm probably getting your eyes buggy there. Anyway, that's it. I don't know if I have any questions today. Let me change a few things on my screen. Let's go back to okay, this is where we ended up. Let's see. I don't see any questions. That's okay. Well, with that, we appreciate everybody who's attended today, and I hope it's been beneficial. If you if you are not subscribed to my newsletter, let me know. We'll make sure we add you to the list. If you want to look at the webinar next time, that'd be great too. Oh, I guess I didn't mention, see the QR code in the left bottom? If you scan that QR code, you'll get to a site that has a video on Kai-Zen and a lot of explanation. And if you want further information after looking at that, you'll have a place where you can put in your name and information. I'll get an email and I'll give you a call and we'll talk about it. Have a great day. Bye.